Hello, I'm Martin Lewis of MoneySavingExpert.com. The Chancellor has just sat down in his spring statement. There were 5 main announcements in there that affect people's personal finances. So I wanted to give you my initial instinctive reaction to what he said. The big one was about national insurance. Now, it was pre-announced and has been highly contentious that national insurance is due to rise by 1.25 percentage points, which actually increases the amount of national insurance, which is effectively a tax on income for most people, by around 10%. People will pay 10% more national insurance because of that rise, roughly. That is still in place, but to mitigate it, what the Chancellor has done is change the threshold at which you start paying it. So today, you start paying national insurance once you earn around £9,600 a year, and you start paying income tax once you earn around £12,600 a year. From July, he's moving so these two levels will be at the same rate, which is sensible. So that means you won't pay national insurance now until you earn around £12,600 from July, £3,000 more than right now. The saving on that is 360 quid. But of course, once you do start paying national insurance, because of the 1.25 percentage points extra that people were paying, people are going to pay more. So where does this even out? Effectively, the way it works is on earnings from over £9,600 all the way up to around £35,000, you will either not pay any more, or lower down, you will pay less national insurance than currently. If you earn £35,000 or more, then the 1.25% percentage point increase outweighs the change in the starting threshold, so you will pay more national insurance. So the break-even point is around 35 grand. If you're under that, this is a gain. If you're over that, then the two measures are a loss for you. The next thing that he talked about was a 5p cut in fuel duty. Again, widely flagged, it's been in all the papers. Petrol and fuel costs, this is about, and they've been very high. So, motorists around the country are going to pay less to fill up their tank from now on. Of course, it is still based on the huge fluctuations we're seeing in the price of a barrel of oil. So it will relieve that somehow, but actually the situation in Ukraine is probably even more important there. But it's 5p less duty going to the Chancellor and 5p more per litre going in people's pockets. What's that? It's probably just over a quid if you fill up a typical tank, isn't it? Around a quid less on a typical tank. The next thing announced, relatively small here, this one, is currently you pay VAT on home energy efficiency measures like installing a heat pump or solar panels or insulation. He's going to get rid of those. For those people who can afford to insulate or get better energy efficiency measures in their house, that will be a benefit in future, but it's not a short term, not going to relieve anyone short term with the huge hikes in energy costs we're facing. To try and help those who are more vulnerable, there's £500 million more to the Household Support Fund, which helps vulnerable people, hopefully targeted towards household energy bills. And so you're going to need to get in touch with your local council. If you are really struggling to pay your energy bills and you're on a lower income, there will be more money. I know some councils have been close to running out of those funds, so there will be more money coming to be able to help support you, and it is worth talking to your local council. That's it on energy. So on energy, not particularly generous. We know we've got the £150 council tax rebate coming for those in bands A to D in April. You'll get it in cash if you pay by direct debit. If you don't pay by direct debit, then you will be told how to claim it, and if you don't claim it, you'll get it as a rebate. And then there's the more controversial £200 loan not loan scheme coming in October. So limited help for energy, but I think what the Chancellor would argue is, well, there's the Household Support Fund to help the most vulnerable in energy, and the cut in national insurance should offset it a bit. None of this will offset totally the rise in energy bills, which are likely to be around £1,300 year-on-year increase in October, but it will mitigate it somewhat. And then his rabbit out of the hat is that from 2024, likely to be an election year, income tax, the basic rate of income tax will drop to 19 pence. I don't plan to talk too much about that. It's a long time away and it ain't going to help anybody right now. So that is my rough summary of what happens. I hope it helps. Got to go and do a little bit more analysis, so give me some wiggle room if it isn't quite right, because he literally only just sat down.